Hello everyone, this is Juan Sarmiento and today is Friday, December the 30th. I'm not going to add anything today. The market's volatility is, well, as you can see, let's load the VIX here. And you should see that the VIX is sort of in the 20 area, but we'll wait until the new year when earnings begin to come in and see if the markets decide to rally. For the time being, the VIX is low, which is good, but I don't really have any candidates because, well, there is no real good motivator to get into a new trade. So let's evaluate what we have now. You can take a quick look at something like Caterpillar. Oh, it's hitting new highs. Okay, but now it's sort of pointing downwards with the stochastics here. Okay, well, let's see what we have. This is in good shape. Let me delete all this so we see exactly what we have. January 6th is next week, and we are right there at the cross, right at the bottom of this point of the smiley face. That means our delta is near neutrality, which is good. All right, and these are next week, expire next week. We can roll them over, but I prefer not to do that. Perhaps the call side only. Okay, so if we go analyze rolling, and we leave the put side. Okay, let's analyze that. And how far are we going to roll it? Well, usually I would roll it to February the 6th, okay? And then leave 1 week behind. So you count 1 month from now, okay? So we're closing this January and we're entering the next available February the 10th or February 3rd. If we do that, our delta is going to increase, okay? Oh, so that means, well, if we do that, we could take one of these calls or roll it up, all right? So let's do the rolling first. And then we can sell one of these calls or roll it up. Just sell one. And that makes it sort of too negative. Let's wait until it gets filled, my trade. And yeah, it's still negative, you see. And we want to tend to neutrality. So selling one won't do the trick, but we can definitely, we have 2 outstanding calls. You see, we have 2 short calls, 4 long calls. So we can roll up 2. Analyze rolling. And what that means is we take the 2 calls we have, sell those, and buy at a higher strike price, 240. See that? Except that it wouldn't be March, it would be February, the exact same as we have, same expiration. So that neutralizes my deltas. Okay, I'll just need to get this filled and then we do the rollover. Because if we did, well, let's do the rollover. Let's do the roll up rather, and I'm trying to make sure that the rollover is also filled. So we're doing a roll up and a rollover, essentially, if that makes sense. Okay. Let's wait until the one fills and then we help the other along. Okay. Let's go to Cisco. Here we have January 13th. There's plenty of time for that to work. So next week we'll figure out what we're going to do about that. Gilead is sort of negative, bearish. Good thing, because it's been going down. Let's take a look at the chart. Yeah, it's been going down. We could neutralize it a little bit, I think. How do we do that? We sell some puts. Next week, puts. We could do the rollover of the calls first. And 8 of those, roll them up to February the 7th, February the 10th. Okay, so when you do that, bingo, neutralized. Good. So let's do that. That will close these calls. You can always sell puts if you wanted to make it more bullish. Let's look at the chart. I think we just want it neutral. It's moving sideways. We could change its Caterpillar. See that the price has come down, so cancel, replace. Unlock it and lock it again for 420. That reduces my price to something more in line with the market. We can change that to cancel, replace, unlock and lock again. And the Gilead, and okay, and this one here, cancel, replace. No, that's fine the way it is. It's a little below market. Okay, Cisco. We're gonna leave Cisco alone. Let's go to GS. We have plenty of stuff here. Let's delete all that so that we can focus on what we're gonna do here. Yeah, we could possibly do a double rollover. You can definitely do the puts. Let's do them both. Analyze rolling. And let's go to February 10th. And that's more delta neutral. Right now it's positive. I want it sort of neutral to negative. And if that fails, we can always change the put. Let's see what we have here. Yeah, it's sort of at the bottom of the market right now. So how do we do this? Well, we can roll the put, roll it down. Because we have one outstanding put, you can change it from 340, 350 to 340. That means we're rolling it down to the same expiration. Okay, let's wait until that other trade fields. As they begin to fill, then we can add further trades. So we'll come back to GS. Yeah, that's good. Let's move on to LMT, Lockheed Martin. We can delete all that. And here we have January 20, no need to change anything. It's perfectly delta neutral. I'm not going to change that. Starbucks. January 20 expiration, delta neutral. We don't need to change that. Okay. Now we just need to try to make this stuff filled. The GS, that's a good price. Let's see. We can reduce the prices a little bit on each one of those. Like this Caterpillar is too high. 1, 2, 3, 4, 5. You can lower them by 5 cents. Decrements, I guess we'll call it, until they all get filled. Okay, that Caterpillar got filled, so let's look at the other Caterpillar order. There it is. Both got filled, and as you can see, it's delta neutral. And I tend to do that as a Overall, we don't know where the markets are going, so as long as it's delta neutral, we are reducing our costs and leaving the opportunity for a move in either direction paying us off. In the case of Caterpillar, has been going up very nicely, so our strike price is much lower than the current market price. So yeah, we'll do that. You can go and check Caterpillar here, and year to date we have $134. Not a whole lot, but that's the game. Okay, you just do the rolling overs and you just do this mechanically and hope that it will work. Okay, let's move on to the next trade. Activity and positions. GS, we can reduce the Gilead by 5. 1, 2, 3, 4, 5. And GS. And so we goes until it gets filled. I wanted to get this GS filled while we are watching because I was planning to do another adjustment. So yeah, you can see that I wanted to roll it down, and doing that would neutralize my trade. If I don't do that, it leaves me a negative. Then the delta, and I think that this stock may begin to rally up, and earnings are coming too. So we want to get as much money out of that trade as possible. Just leave it as a lottery ticket in case the stock moves strongly in either direction as the earnings come up. And this is how I adjust my trade, because I want it to get filled, and I'm not too ambitious. I just want a trade done. It doesn't have to be. Okay, hopefully it will get filled. That's what I'm going to do, all right? Let's go to GS again. And let's send this up in case this. I'm going to send this roll down of puts. If that's all I do, it's not going to look too good. See that? But at least it's not too bad. It's not different. Okay. And I leave you alone. I'm going to try to get this filled. But there's no point in having you watching all this. It's very mechanical. Price reduction until it gets filled. Okay, so there it is, got filled. Now we need to reduce. Let's see what it looks like now. It's still delta positive, so which is good, but I need to roll over to neutralize it, to do the rollover. Keep on reducing the price until it gets filled. Okay, I'm gonna call it a day, but you can bet that I will make sure that this gets filled before the end of the day at some price. I don't know which one it would be. Obviously, there is a price here. If I put this natural, it will get filled, but I want to reduce it progressively, not to get the worst price possible when I have a long range there, a long range of potential prices, okay? But you can see how much lower it is from this mark, all right? That's all for today. Thank you very much for joining me, and see you next time. Bye-bye.